Let's get a sound check. Testing, testing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Fair to Midland. Thank you, Don. Hopefully you guys are enjoying your summer down Florida way. We had a pretty nice weekend. It was supposed to be pushing 100, but we were in the high 80s or low 90s, so pretty nice. Global warming smacks us starting tomorrow. They're looking for daytime temperatures in the mid-70s for about 3 days. So Mother Nature is still throwing us curveballs for the crops that need what is called in the business therms. That won't be good. It'll slow the development of corn and soybeans in the center part of the United States where the big production is, but the rest of us will probably enjoy a nice fall-like temperatures. It is Monday morning. There isn't a lot going on, not much to talk about. The biggest news, hard news out over the weekend was the European Union's collective industrial production was off 1.1%. They were expecting it to be up 0.3%. So the economic recovery in the EU remains tenuous at best. This week we have retail sales, we have industrial production, so those numbers can have a lot of impact on our trading, given the fact that everybody is still talking about second, third, and fourth quarter at least 3% growth. Pretty important week for news when you get right down to it. France is on holiday today. We'll see how much impact French traders have on the volumes and the volatility in the markets. Probably not as much as London traders, because London is the world's second biggest money management center. So I don't expect the lack of French trading will, take too much out of today's trading. So here we are. No news to drive today's trading. We can see that volume has moved lower over the last 3 sessions. The biggest dynamic we will face now is usually primary dealers post-auction sell, setting up the next auction. So we have primary dealers selling, and the auction is the last week of July for the 2 through 7 year. And then what is the ES going to do? And all stock markets around the globe rallied with some strength. Collectively, Asia and Europe are both up over 2%. So we have a strong stock market. When I looked earlier this morning, the E-mini was up 6 full points. So our stock markets are pointed higher. We've had a 30-point correction off the highs. So my guess is that with any kind, well, not even with help from the news, that we're pointed at least to a retest of the recent highs. So I think the E-mini being up today probably ultimately will be what impacts our prices. So want to sell 7s to 11s, then 15s to 19s. Would like to get it done closer to 12 for obvious reasons. We've got volume right here, so structurally the first sell would be at 6.5 or 7, leaning against these numbers, 6.5 to 7.5. Right in here, then the second sell would be close to 12 with this volume number right up here. On the buy side, I'm going to give it a little room on the upside. There's a lot of stuff that comes together at 125 even, 24.31.5, 24.29.5, 24.28. So this area right here, without a big movement, explosive movement in the E-mini, is probably going to at least bounce us. So we're going to put our first buy at 29 to 1, and then the second buy 21 to 25. I think the first trade, though, of the day in the financials is to find a place to sell them. Now, we have had E-mini and financials trading up and down in the same direction. So my feeling is that that won't happen, but that's a possibility. So If the E-mini trades up and the note trades up, we'll come back and we'll review what the calls that we've made. But there's a lot of support starting basically at 125 even, and I think we ought to at least get a bounce, or that's the first area that we'll have others with us on the buy side. Okay, looking at the 30-year. The knob spread's holding in actually pretty well. So that means the longer term players still think interest rates are sideways to lower. The yield curve has flattened, and you can see that the retracements in volume aren't as much in the 30-year because of the knob spread buying. So 15 to 19, sell 1. 23, 27, sell 2. On the buy side, letting them get stops below the overnight session low. So this one might be cute, but we're going to try to buy 1s to 5s. A lot of stuff comes together in that 28 to 137 area also. So leaning against the top side let because of the knob spread is what we'll do. Then 25 to 29 will be buy 2. But quite often on Monday mornings, especially in the financials, there isn't a lot going on when there's no news, especially if the E-mini is quiet also. Gold got whacked over the weekend, and I'm surprised it sold as much as it did, but it really got smacked when we go take a look at the and the reasons given in the financial press is that there are no banking problems in Portugal that will spread outside of Portugal. I forget which country on Friday announced that it was going to let its fourth largest bank fail. I think it was Bulgaria, but I'm not sure about that. So anyway, you can see that we had quite a move from 40 down to 18. That's $20. So how much is left in the day session with the market in London? You can see the selling started well before London opened. So London's kind of at the tail end of it. And we might have some support down here. So on the sell side, this 25 area plus or minus, real aggressively against this 22, against this volume number right here. Usually they get about 50, when they come back and test resistance, they'll get about 50% into this area. So this 25 to 27 area right here near is probably a pretty safe place to get it on. And then 30, picking up these single prints right here. On the buy side, we're back to our 15 to 17 area, so we're going to make buy 1, 15 to 17 on the assumption that most of the selling's done, and then buy 2 will be 10 plus or minus. But gold got hit really hard, and there really isn't much of an explanation for why it got hit so hard anywhere that I've been able to find. Okay, Draghi speaks at 1300 Eastern Time, which will make it 7 o'clock in Europe. They will have just finished a nice meal. And, I mean, the euro's still doing what it does. It's a buy at 136, and it's a sell at 50 until proven wrong. So that's where we're going to find ourselves this morning. I don't think there's anything Draghi can... do other than rhetorically pump up the sentiment that the ECB is going to do the right thing when it needs to do it. That they don't have as much flexibility as the Fed does. So going to make sell 150 plus or minus. And then 65, 75. On the buy side, we're at 33, so low is 36. We'll make 36, 36.10, buy one. And then our 75, 85, buy two. And I've opened it up a little bit to the downside. Probably the first trade we're going to see is an opportunity to be a seller. Then these single prints down here in this 15 to 20 area will be really, really important. If we can't take out those single prints 15 to 20, then we'll have to raise our buy. Okay, crude. All sorts of. I put an article up on crude into the room earlier, and crude's telling us that the Iraqi oil is going to continue to ship. Libyan oil, back before Gaddafi was taken out, was 1.5 to 1.8 million barrels a day. And one of the articles over the weekend pointed out that Libyan oil being shipped is actually slowly increasing, and they expect it to be 350,000 barrels per day. And that's quite a fall off, but they did say it was increasing. The Iraqi oil is in the southern part of the country, and it hasn't been touched. And like I said, even ISIS needs cash flow, and there was an article out over the weekend how ISIS is selling crude oil to the Kurds for at the clip of $1 million a day. So this ISIS is going to be a well-funded terrorist organization, and they got so much money. You know, they got ministers here, ministers there, and they do know how to use the medium. So they've got money to at least support their media efforts. I thought we were going below 100. We haven't made it yet. Here's the attractor. So today, if we fail to get through this 101 area, then I think we got a shot for at least stops below 100. So we'll make 75, 100, sell one. It's pretty aggressive. Pick up resistance in this area right here. And then our sell 2 will be in the 50 area. Picking up resistance right up here. I think 100 will bounce the market, so we'll make 75 to 100 buy one. And then we'll make 99 and a quarter buy two. It's hard for me to see us getting down to 99 yet. So I think 100 will bounce us. And to the E-mini is just pointed higher, and we've had a 30-point correction off the highs. So, does it have to have a reason to trade higher? No. Does it ignore negative fundamentals? Yes. The GDP estimates. I'll put an article up that shows you how badly. The major economists at all these firms have missed their growth estimates. Now, at a brokerage firm like Goldman or Merrill or city or whatever happens. I mean, what are their economists going to come out and do? The economy stinks, it's going down, and what does that do to trying to get people to buy stocks and be active? It doesn't do anything for it. So you expect that from the brokerage firm economists. But what we have in the industry is economists have figured out that if everybody makes the same estimate for growth within, a hundredths or a tenth of a percent, then everybody looks smart or dumb collectively, and it's harder to get fired. Well, everybody else came up with that number. What do you expect? And in portfolio performance, the industry a long time ago learned that if you compare me to my peers as opposed to absolute returns, it's harder to get fired. So these estimates, these rosy estimates for growth, are based on self-preservation in a lot of ways. So we went from almost 80 down to what, 45 I think was the low. So we had a 35-point correction. In bull markets, 50 to 70 is the norm, and we just don't get them. This market just rallies. And if you want to see it on a bar chart, this is what it looks like. So not afraid to get short, but the time certainly has not come to load the boat to the short side of the market. There was an article out that I think I posted in the room talking about the retail account has come back to the market. And if that is the case and the institutions keep selling into it, then we're dealing with distribution, which usually signals the end of a market. But we're still in an upslope, and we don't really get back and retest these lows. Look, we get higher lows everywhere. In fact, this is the only time we've had a lower low. So the market is strong. It is pointed up. There's just no two ways about it. We cannot forget that. So it's okay to try the short side of the market. It's okay to probe. We do that very well. But we're certainly not married to the short side of the market. So here we are. We got resistance 75 to 78. And I think a retest of 75, 78 is coming this week. We've got retail sales. We've got industrial production. Ironically, the bigger the miss from projections, probably the faster we get to new contract highs. So here's resistance right here. We've gotten stops above this. We've gotten stops above this level. So the market is pointed higher. So I'm going to make 74, 76, sell one. Then let them get new highs, but wait for the rest of the week's news. Sell 2, 79 to 81. If we fail to get through this 72 area, we're going to lower it. On the buy side, the first buy is going to come in at 65, 67, picking up this area right here. And then 60, 62. And that's all I've got. Okay, it'll take at least 15 minutes to get everything up and posted. I'll get busy on that right now. I'll be back into the room as soon as I get that done. In the meantime, good trading.